Hi, I'm Montana Yorke, your host here at Cambridge House. And today I'm joined by the one and only Gwen Preston, the Resource Maven. Thank you for being here, Gwen.
Oh, thanks for having me.
Gwen, if you wouldn't mind, I'd love to start off just hearing a little bit of history of the Resource Maven.
Yeah, for sure. So I started Resource Maven 7-8 years ago now as a way to create a series of newsletters to help investors understand and then take advantage of the opportunity in the metals and mining space. And that opportunity spans all the way from like the super high risk pre-discovery explorers that are really exciting if you know what you're doing and want to play that game, all the way through to, the big producing companies and taking advantage of sort of like, green energy shifts. And so that whole spectrum from super early stage all the way through to large producers. I write a series of newsletters that covers those investment opportunities.
Great. Awesome. Thank you so much. And then I know you had a chat with a dear friend of mine just a few months ago, and you mentioned that you love the resource industry because it's tangible, with gold just hitting $1,900 the other day. What is there for you? What else is catching your eye on the market?
Well, it's a really exciting moment for someone like me who lives in this space all the time. And of course, the metal space ebbs and flows, right? And the ebbs can feel very long. But right now we are right at the beginning we're kicking off a pretty exciting phase here. So, copper has already moved up dramatically in the last little while. That makes so much fundamental sense. Like I say, like I mentioned before, the green energy revolution. Mm-hmm. However you feel about climate change and the powers that are pushing that, it's a reality, right? And the amount of copper that's needed to support that is not being produced and will not be produced over the next 10 years. And so that means that we need higher copper prices. We have higher copper prices, and that adds so much intensity and opportunity to the copper space. So, one thing I've been doing is buying early stage copper porphyry explorers because I know that it's hard to find a new copper porphyry, but if you do in a market that's hungry for discoveries, man, that can really turn out well. So that's one thing that I'm doing. And then gold is very well set up. I've just mentioned copper and gold. I like silver. I like nickel. There's other opportunities out there for sure. Even phosphate, I like fertilizers, because we are in this inflationary world and commodities are just coming more and more to the fore. And I think that makes a lot of sense on fundamental levels. But gold, there's hardly a crack in the gold story right now. Gold is an inflation story. Gold is something that very reliably rises with rate hikes. And we are at the beginning of a new rate hike cycle. Gold, there's some whales out there that are buying gold every time it dips. Is that the Russian central bank? Quite likely. There's geopolitical tensions, but even that isn't having a dramatic effect. Really, we are just fundamentally in a place where gold makes sense. Layer in as well, the broad markets have been on this amazing run for 12 years, and we're transitioning away from the platform that supported that, which was very accommodative central banks and very low interest rates and tons of buying of treasuries and things like that. We're shifting away from that. We have a strong economy. We're shifting away from that. And cracks are showing in the insane ascent that just kept going, right? And we're seeing that in tech stocks in big and small. I like to tell the story these days of from 2015 to 2019, Apple grew 2.7% compounded year over year. In 2021, it grew 33%. That is a COVID effect, and it was justified, but it ain't going to happen again. So there's a lot of reasons to believe that cracks are going to be significant in the broad stock market this year. That's a gold story. So, between all of these things together, I think they really just support metals. And so you just have to decide as an investor what way you want to play that opportunity.
And as an investor yourself, are you currently deploying capital into today's market?
Yeah, for sure. So I'm buying, I don't need to deploy a lot of capital right now because my whole world is about, for the past 7 years, has been about preparing for this kind of opportunity. And obviously things have worked along the way. Other things have not worked along the way. That's what portfolio management is. Yep. But the big picture driver has been positioning myself and my subscribers. I write newsletters about what I'm buying and selling, and people subscribe to those newsletters to just follow along and get that insight. And so, I and my subscribers have been preparing for an exciting bull market in gold and in copper and in nickel and in uranium. I haven't mentioned uranium yet. That's another whole topic, but we've been preparing for this for quite a few years. And so I don't need to deploy a ton of capital right now because I am well positioned. But the things that are catching my eye probably most right now, gold juniors, still very cheap. The majors in the last month have taken off alongside the price of gold. But even the developers, those who are building new projects, haven't moved a lot yet. And the explorers have moved even less. So if you're not positioned in gold, there's still good opportunity there. And the same can really be said for copper. The big producers have moved, but as you move down the food chain, there's still a lot of opportunity there if you want to position your portfolio for the sort of gold, safe haven, inflation hedge side of things, or for the green energy revolution, copper, nickel, uranium side of things. There's still some great opportunity out there.
And Gwen, I heard you mention portfolio management earlier. Do you mind letting us take a peek inside your current portfolio, or is there any companies you'd be willing to share?
Sure. So I, just as a preface for those who are listening, I specialize in the high risk end of the mining cycle. So I specialize in those who are searching to make new discoveries. So it's very high risk. A lot of them do not make new discoveries, but the ones that do can really just soar, right? So I said, I really like copper right now. I'm buying some copper porphyry. Copper porphyries are a kind of very large copper deposit, and they produce the most of the copper that we use. And so I know that the market will just swoon over a company that makes a new copper porphyry discovery. So in the last while, I've bought a company called Zacapa. I've bought Edgemont, and I've bought Pampa. These are companies that are exploring for new copper porphyry discoveries, copper gold porphyry discoveries. And if they work, that could be really exciting. Of course, I also really like gold. And so you have to choose your stage of the game. I say that developers haven't yet moved that much. Orezone is probably one that I would highlight. They're in Burkina Faso. People will have their own opinions about that, but they're an incredibly competent management team who's building a mine that's going to get into production before you know it. I'd say Osino, Osino, is another one that's sort of they're not building yet. They're still moving towards building a mine, but those are two more advanced gold stocks that I would highlight that I really like their potential in the next little while.
And then just touching on the high risk part of your investment strategy, and then touching on risk, is there any tips or tricks you would give any junior investors in my audience? Anything to be wary of, or anything you did that brought you success?
Absolutely. So the thing that I always start with in terms of tips in this space is know how much risk you want to take on and how much time you want to commit to your portfolio. And those are very intertwined. The higher risk a stock is, the more attention you have to pay to it. Because if it's a junior explorer and they drill a hole and the results come out and it's good or it's bad, you probably need to act on that, whether it's buy more, sell some, whatever it is, you need to be paying attention. So if you want to play the high risk end of things, get some insight, make sure that you have enough geologic knowledge or people who are helping you figure things out. And then just know that takes some focus. You got to pay attention and you have to be willing to bear the risk. If that's going to keep you up at night, it's probably not a good game for you to play. The great thing is that in a good market, in a good metals market, you don't have to play the high risk end to get really good returns. If you want to play the low risk end, you can literally buy funds of gold miners, a fund of copper miners, a fund of uranium stocks, and own that. And you won't get the dramatic upside that, happens with discovery of a new deposit, but you will get the upside, the leveraged upside that comes with that miners enjoy as metal prices rise. So I think my most important tip is to play the game that's right for you. And that depends on the amount of risk you want to take on, the amount of knowledge you have, and the amount of time you want to commit. Those things are all very intertwined and they sort of determine which part of the spectrum is best for you.
And Gwen, if my audience wanted to capitalize on the knowledge that you have, where would they find you?
Resourcemaven.ca is my website, and I'm easy to find there to reach out to me, ask questions, or to get a free trial of the work that I do.
Great. Thank you so much.
Thanks.